You've heard of stock, you may even own some, but what exactly is it? Hi, I'm Jared with Carlin Financial Group. For the best retirement information and to help make sure you don't outlive your money, be sure to subscribe to our channel and hit the bell to be notified when we post new videos. Stocks, or equities as they're sometimes known, are a type of security that represent partial ownership of a company. Meaning, when you purchase a stock, you are actually purchasing a share or a piece of the company. This means that you own a small portion of that company's assets and have a claim to some of its future earnings. So how do stocks work? Well, let's say we have a company we'll call ABC Company. ABC Company could want to pay off some debt it's acquired, launch a new product that requires additional investment, expand into a new market or region, or build new or expand on existing facilities. In order to do all of these things, ABC needs to raise money, which is known as capital. The company could do this through a loan, but that would equate to going into debt. The other option is known as going public and offering to sell shares of its stock. This prevents the company from acquiring new debt to raise the funds by instead selling shares of ownership with a claim on future earnings. When it comes to stock, there are two main types, common and preferred. When we generally refer to stock, we're normally talking about common stock. Common stock entitles its owners to vote at shareholder meetings and potentially have a say in how they believe things should be run. Common stockholders are also entitled to receive dividends, which we'll discuss in a moment. Preferred stockholders usually don't have voting rights, but they receive dividends before common stockholders do. And in the event the company were to go bankrupt and its assets are liquidated, they have priority for any payments over common stockholders. Do you own stock and have more questions? Let us know down in the comments. Let's now take a look at why you might want to purchase stock and some of the risks involved. If you're someone who's looking for a higher return than you can achieve in a savings account, stocks offer investors the greatest potential for growth or capital appreciation over the long run. Historically, longer-term investors have generally been rewarded with strong positive returns. So if you're someone looking to appreciate some of those returns and you have the time to allow for that appreciation, purchasing stock in a strong company you expect to perform well and increase in value over time could be a good option for you. However, it is extremely important to note that investing in stocks comes with risk. With these increased risks comes the potential, but not certainty, of greater returns. While stock prices can go up, they can also go down. There's no guarantee that the company whose stock you hold will grow and improve in value over time, and as a result, you could lose the money you invest in stocks. The company could, for instance, fail or go bankrupt, leaving you in a position where you could receive nothing at all in return for your investment. Even when companies are doing well and are in little to no danger of failing, their stock price may fluctuate up or down. These fluctuations can be quite unnerving to some investors and can be caused by any number of factors, some of which the company may have no control over, such as the political landscape or events occurring around the world that could affect markets. So even if the company in which you own stock is still doing well, if you were to need to sell your stock on a day when the price is below what you paid for the shares, you would lose money on the sale. This is one reason why, as you approach or enter retirement, stocks should likely only constitute a portion of your holdings so as not to place too much of your nest egg at risk of these fluctuations. It's also important to note that the portion of your holdings that might remain in stocks in retirement should be well diversified, meaning rather than just holding one or a limited number of stocks, you invest in a number of different diverse stocks which can help offset but not eliminate some of the risk associated with holding stock. This is also true when attempting to mitigate risk as an investor in general. Like Mom always used to say, don't put all your eggs in one basket. Now let's talk about the exciting stuff. How to make money by owning a stock. The first way to make money with a stock, and the way people seem to be the most familiar with, is through stock appreciation, or a rise in the market value of that stock. So let's say, for instance, you were to purchase ABC stock at $5 per share. 1 year later, that stock's trading for $8 per share, so you decide to sell your shares to another investor, and you receive the $3 per share gain. A second way to make money by investing in stock is through what are known as dividends. A dividend is a periodic payment issued by some stocks that represents a distribution of some of that company's earnings to its shareholders. Most of the time, however, these dividend payments are not a guarantee and can and do often change over time based on the company's performance and decisions by senior management on whether or not to pay a dividend. You should know that there can be fees associated with the purchase or sale of a stock as well. These fees for most investors may take the form of commissions paid to brokers who buy and sell the stock for you. Typically, a full-service brokerage will cost more, but the higher commissions pay for investment advice based on that firm's research. Lower or no commission options can be found these days, but that normally entails you needing to perform your own research and choose investments by yourself. I hope this video has helped you develop a basic understanding of what a stock is, how it works, and how you can earn money, as well as some of the risks associated with owning stocks. Please share it with a friend who could benefit from the information and give it a like. If you'd like more help with learning about stocks and other investment options that could be a good fit for you in retirement, you can apply to become a client using the link below in the description. Don't forget to subscribe to our channel and hit the bell so you won't miss out on future videos. And as always, live today, plan for tomorrow.